Clearly, accounts payable and/or invoice automation is here to stay. I need to be clear about that. Both my guest and I agree on that because what we're going to talk about is the actual utilization of those models once they are purchased and implemented. I think it's important that listeners understand that we both believe this is a good thing and it will be here to stay, because you may not think so by the time we get to the end of this. Okay, what's more, PDFs have come to play a huge role in many automation efforts, and that has not always gone as smoothly as we'd like. To that end, I'm joined by Dan French, a very knowledgeable professional who has a lot of interesting thoughts to share. We were on a group call with about 20 other folks when he said something that intrigued me enough to follow up with him afterwards and hopefully get him to come on the broadcast and spill the tea, so to speak. So Dan, I want to break the conversation into two areas. Let me throw a few quick questions to you to get started. What is your estimate of the percentage of companies that have at least started on some sort of an AP automation journey?
Right, Mira, that's a great question. And I thought about this, and it's nuanced, like all these questions are. I'd say companies over $1 billion in revenue, if you assume that ERPs they make the start of AP automation, then 95% of companies are doing something in that way. But once you start looking more about automating the real mechanics of invoice capture, and the kind of the routing and approval and matching with GRs and all that stuff, there's additional stuff you need. And I'd say probably in the above $1 billion revenue range, I'd say kind of 50% are doing something.
Yeah. And of course, those numbers decline as revenue declines.
Yeah, and as revenue goes up, it gets up to 95%. So if you're in the $10 billion plus range, 95% of those folks are doing something. And how well that's going, it varies from company to company, obviously.
Yeah, okay. And if, let's say, you're in the 200 to 500 million, you want to take a guess at what that number is?
Well, again, you've got to separate out people having some form of ERP. I'd say, again, that's pretty high. I'd say that's probably 75, 80%.
Mm-hmm.
But in terms of doing the kind of AP specific mechanics, I'd say that gets a lot smaller. I get down to 40, 50%.
Okay. So what are your expectations for the next few years as far as starting some sort of an automation project in accounts payable, of course?
There's a lot going on, and there's a lot of new automation players coming onto the market, which is good news. I mean, it's good news in general for the industry. It's obviously difficult for organizations because they've got a lot of people to understand what they do and why they're different. And obviously, developments in machine learning and AI are definitely helping. They're not helping at quite the speed we would have liked them to, but they're helping. So I'd say this problem isn't going away.
Right.
Not in our lifetimes, basically.
Right. I have some funny stories, which I won't bore the audience with now, about trying to use AI and the advice I got. And, I'd also invite the audience to put their projections in the comments below, whatever they think. This will be kind of interesting to see. Once purchased, an automation solution, like anything else, I guess, is rarely 100% smooth sailing. What are you seeing as far as utilization after, say, 6 months or a year?
Certainly within a year, and in some cases 18 months, I'd say most organizations that invest in a technology are using it, which is a good thing. But the challenge is invariably the expectations in the business case about the scale of impact and how quickly that impact will happen are always over optimistic. So whilst all the organizations are within 18 months, like 98% are using the technologies, I would say of that 98%, 99% of them are saying this is actually not quite as significant as we thought it was going to be.
Yeah, okay. I agree with you. All right, now before we get to the PDF problem, which is a huge one in my humble opinion, I have to tell you, Dan, that I love your periodic newsletter, Something to Consider.
Oh, thank you.
Did that title have anything to do with selecting Consider as the name of your company? And you can tell us how and why you picked Consider as the name.
That's a funny story. So when we started doing the newsletter a few years ago, the company was already called Consider Solutions, and people were thinking about a name. And the first name for the newsletter was going to be Consider This, because it was a phrase out of an REM song.
I like that.
And I quite like that, but then apparently there was some reason we didn't choose that.
It's probably a trademark issue, copyright issue.
So something to consider worked out. But the funny thing is, the reason the company was called Consider Solutions is, when we started out, I was kind of working out, we already were trading and doing stuff. And I said, what's a good name for a company? Because you forget that, every company name before it became well known was kind of weird, right? It's sort of, nothing sounds right. So, and a good friend of mine, Rod Banner, who happened to be an executive at the WPP advertising group. I said, if anybody knows, it's him,
Right.
marketing. And he said to me, he was very good. He sat down and said, so tell me, what is it you do? So we had this long conversation, and he didn't ask me any questions. I just talked about, we're looking at business problems, process problems, and technology problems. And there's all this received wisdom out there. And what we're trying to do is help people really think beyond the received wisdom and really get to the root cause and consider what this and consider that. Anyway, at the end of this,
Consider this, consider that.
so at the end of about, I don't know, my 15-minute monologue, which was about enough for any human being to survive, he said, well, Dan, he said, what's interesting to me is, you know, the word that comes out most in what you've said to me is consider. You're asking people to consider. So why do you call a company Consider? I went, well, that was good. Do I have to pay you for this? And he said, no.
Luckily, he was a friend.
Exactly. Yes. So yeah, that was that. So it's so thank you, Rod, if you're listening. Thank you.
Yeah, it is a good name. It is a good name. All right, Dan, let's talk about PDFs. And first of all, I just want to make it clear to the audience that while neither the US or the UK is formally involved at this moment in any of the electronic invoicing mandates circling, I guess, the rest of the globe, it's something that we need to be aware of. If I understand that issue correctly, the PDF invoices that we have all come to know and love don't hold up in that environment. So again, not an issue for the US or the UK, at least right now. We also got to think about the future. Is that your understanding, Dan?
Yeah, I mean, we're in an interesting world, which, you know, a lot of organizations, I mean, just before COVID, a lot of organizations are still processing paper invoices, scanning them in large quantities. And obviously, COVID did something to kind of, you know, knock that on the head a bit.
Yeah.
Obviously, PDFs are a bigger percentage. But obviously, PDFs aren't intelligent documents. They just, I mean, there is an intelligent form PDF, but when you just scan something and turn it into PDF, it's not an intelligent document. And the challenge with these continuous transaction controls, these regulations coming out, and I guarantee it will hit the US and Canada and the UK at some point, because governments are realizing they're losing a lot of sales tax. They're losing VAT in Europe, using sales tax in America, because people aren't declaring it, and they're giving people a holiday on sales tax.
It's not only sales tax, Dan, over here, it's income tax.
It's every tax. Okay, so the idea of these continuous transaction controls and the demand for electronic invoicing is that governments, particularly, you know, so the classic cases, countries you might have associated with a more VAT kind of avoidance or tax avoidance than in others, they're busy saying, no, if you're running a business-to-business transaction, that has to go through a portal where that information is available to the government. And you know what? You know, that's fine, but it just makes life a bit more complicated. So, but the invoices have to be machine readable. So PDFs will kind of become less significant over time, but it is a long, slow process. And certainly in North America and in most of Europe at the moment, Northern Europe, you still, you know, that's still a dominant form. And, you know, thank God we're largely getting rid of paper invoices, although there's still a surprising amount of them.
I know. And we're not even, honestly, we're not even talking about that electronic invoice mandate over here. Although I have to think the day that a country, I don't know which one, comes out and says, hey, we collected 24% more tax revenue because of this, that's going to be an eye opener. But anyway.
Well, I got some data. I picked up some data that said in Europe alone, the sales tax, or VAT as it's called in Europe, the gap, as in what's not being collected that should be collected, is 140 billion euros.
Yeah, it's a huge number over here too. It's a huge number.
And if you look at that across an economy that's roughly the same, collective economy, roughly the same size as the US economy, 140 billion, you can do an awful lot with that.
It's a lot of money.
Hospitals and
yeah, especially when over here, I'm sure it's the same over there, politicians are loath to raise taxes because then their voters won't return them to office. So
exactly.
Right. All right, but we won't go down that road. Okay, but the PDF issue that you and I were talking about, that is one of them, but a more basic and more present issue is the fact that when those PDF come in as an email, which honestly I've been advocating for, the transition from that to email isn't smooth, is it?
No,
from that to automation, rather.
No, that's true. And I think, I mean, when most organizations were doing a lot of scanning of paper invoices, that scanning was scanning the PDF generally anyway. So that's what happened, but that was a massive cost and effort associated doing that. And now most organizations are saying the minimum acceptable level is you send us a PDF by email. And I think that's fair in this day and age. Anybody can send, even a mom and pop shop can send a PDF invoice. So that's great. But because the PDF isn't an intelligent document, It's not machine readable in its own right. So either somebody's got to read it and type the data in, or you need some technology to try and get out the bits that are relevant, like the date and the vendor and the address and the bank details and the value and the tax and all that good stuff. Now, the reality is that's slightly more challenging than you might like.
Right.
Half the time, of course, suppliers don't actually put all the relevant information on the invoice, whatever it is, which is the first level. So we've got to sort that out. But certainly, PDFs are a challenge. So we've got to get the data out of an unintelligent PDF into systems. And that's where the issue is. And lots of companies are trying to solve that problem, and they're doing it to a greater or lesser extent. And obviously, the intelligent, the next step, a lot of people are using EDI for direct procurement. That's usually got XML-based intelligent understanding. So you don't need to worry about this. It's going straight into the ERP system. That's great. But if you're a supplier which isn't a very high volume direct supplier to another organization, putting some kind of machine readable invoice out is kind of complicated. It's not as easy as people imply.
No. And then you've got the other issue, which we've had forever, is that all invoices aren't the same. So the data can be up here on one and it might be over there on the other. You say it might not be there at all on others. Okay. So when they are reading, when the information comes in a PDF, however, and then it gets read into the automation solution, you were talking about some startling numbers as far as not needing further human intervention.
So one of the things that's always interesting with these kind of, with lots of technologies, you get lots of statistics which are very impressive. So it's normally common to hear that a technology has a 99.99% success rate, which sounds wonderful. So that means that for every 100 invoices I get in, there's only one that or even half of one I have to look at. Well, look, of course, it depends what you mean by success. So they might be 99.99% successful in turning a PDF into another asset in the ERP. But the big question is it an accurate representation of the original invoice? And that is, that's quite often down at the 30% mark.
Oh,
that's a way different story.
Right.
Now, no, there's a lot of work going on to improve that. And there's a lot of specific situations that can make that better. But we've got to be realistic about the fact that when you've got a lot of suppliers with lots of different invoice formats, that's kind of what you're starting with. And then so the key point is no technology is a silver bullet. You've got to work out how we're going to get down this roadmap to kind of cut out all this manual effort in dealing with exceptions.
The problem, as I see it for the accounts payable staff, is management typically, in my hypothetical case, buys this solution and they see the 99.9% figure, and they're like, oh, we can get rid of everybody in in a week, which that's a whole nother issue. And then there's the reality of the 30 or the 40% success rate.
And you also see lots of scenarios where you start these initiatives, and of course there's tools that aim just to do the invoice ingestion, through the tools that claim to do the whole end-to-end cycle from source to payment. But, these require massive process change, and you often have organizations who have a big business case, they spend lots of money, and they've got to transform, save 80% of the staff, and then they realize actually behaviorally it doesn't quite work. So it only really works for 10% of the supply base, in which case you go, well, so that's not really had the impact you wanted.
No, I mean, it's something, but it's not what we're planning. So what do you think this means for automation projects that rely heavily on pulling invoices directly from email?
Well, it means that you've got to be very focused on invoice ingestion. You've got to be very focused on the quality of that and how you're going to get that data in. So you've got to get your chosen shortlisted suppliers to run a really good proof of concept with you. Not on your data, not their data. You've got to be able to say, what's this going to look like for our suppliers? And take 10,000 invoices, put it through the thing. If they don't want to do that, then you've got a problem already. But that's more and more of the companies are starting to offer that, and I think that's a critical thing. And then you've got to say to yourself, okay, they obviously everyone claims to have a machine learning algorithm that says whatever you start with, it'll get better over time.
Right.
Well, that's possible, but machine learning doesn't necessarily work that way. So you've just got to have, you want to know where you start, and you've got to have a realistic plan for where you're going to get to. And it's not just about the technology. You need to implement some policies. You need to communicate those policies well. If the invoices don't have the information on that you need, no technology is going to fix it.
Right.
So I think that sometimes this belief that the technology is a silver bullet, and I have to say, at least half of the issues, and I think that's conservative, they're behavioral, both on the company side and the supplier side. And you've got to keep that, because it's not going to be successful otherwise.
So do you see the service providers being able to fix this?
I think they're making progress. I do think the challenge is because everyone's, and particularly we're in a white heat of AI this year on the back
You
of
know, yeah.
so everyone's very keen to try and support this argument that AI will do it all.
No, it won't.
The truth is, you need some serious process change, and I think there's an understatement about how much you need to change the process. And we know your best bet is change the process and policies first,
Right.
and then apply the automation. If you apply the automation first, it's just kind of complicated, and it makes life unnecessarily so. So just make sure you're clear on how to streamline, simplify the process by segment, by different spend journey. Work it out. Work out where the technology is going to apply. Do a good POC, and if you do it in that order, you'll probably be in pretty good shape.
Okay. So any recommendations, assuming that we're not getting to this 99.999% accuracy anytime soon anyway?
Well, the most important given what I've said about POCs, that's a big recommendation, but really look at your process first, because again, we're led to believe that, purchase to pay is a single process, you can automate it and streamline it. In reality, every organization has 7, 8, 9, 10, 11 journeys through that process, which are all desirable, whether it's capital expense, whether it's the non-PO journeys for rent and utilities, whether it's whether it's direct, indirect, all the different things you have. So you've got to map those out and work out how they work. So mapping out the processes first is critical, and then work out what policies are appropriate for each of those journeys. Define the policies, but then communicate it, not just internally in the organization, but to your supply base. They have got to know what the policies are and the impact of those policies on them getting paid. The great news is, if you want to change behavior, follow the money, which means that trying to change behavior in your own organization is much harder than trying to change behavior of suppliers, because the local CFOs and controllers of your suppliers are most concerned about cash flow. They want to get the money in.
Right.
If they know certain things have to happen to get the cash in, they will do it. But if they don't know, it won't happen.
Right.
So that's what I'd say. Policies, good policies, well communicated, and it isn't one policy for the process. It's one policy per supplier segment or spend segment. It varies. So you've got to put that effort in first.
Right. Sometimes just telling the supplier what you need in order to pay them.
Exactly.
As you said, they want the money. Automation is here to stay, and you will get the most out of it, as Dan has discussed, by recognizing the issues and working with them. That's why we recently did a short video on these issues, so you can create a checklist to use to ensure your automation success. You can watch it right now using the link that will appear on your screen and is in the description. As always, we appreciate your thumbs up and your subscribes, as YouTube and other channels take this as a sign they should share our content with other professionals just like you.